Hello everyone and welcome back to another portfolio update. So in this update, I'm sitting at $214,836 inside of my Wealthsimple account. And this is the second month of my portfolio update series where I am actually down from a previous month's update. So in the last month's update, I was at 216,481. So a little bit of a dip here to just under 215,000. So that's to be expected though with the volatility and decrease in the market we've had in March, mainly coming from the tariff threats and trade policy in the United States, mainly affecting the S&P 500 here with a decent drawdown. Not quite in correction territory, but I believe the NASDAQ did enter and the S&P did as well, but it has come back a bit. It did rebound and then go down again, so we are not in correction territory, so it's really not that crazy of a dip, to be honest. But yeah, when your portfolio is pretty large, those dips have a very large amount of effect. Because if you think about it, like a 10% return with $100,000 is $10,000, and then when you're at $200,000, 10% return is going to be $20,000. So those little percentages mean quite a bit once you're at a decent sized portfolio, which I am now at with over 200,000. So this month was really good for dividends though, and I actually did a revision to my spreadsheet here. I did document all of my dividends throughout my Wealthsimple history, and each of the individual funds here are shown. So you can see back when I held HYLD instead of ESBX, and then HDIV instead of ETSX. So you can look back at all of the funds that I held in history. But right now for the month of March, I had $48 from VOO, $144 from VDY, VIU and VE, very little, 34 from VIU, 629 from VEE. And then the name of the game for this month was a massive increase in the distribution for ESPX and ETSX of $231 for ESPX versus last month was $159, so massive increase there. And then for ETSX, $179.21, and it was $152.10 last month, so huge increase there too. And then SBLT, $51.35 as usual. So yeah, massive increases in the distributions for ESPX and ETSX. So I had suspected this was going to happen. It's interesting that they did it in February instead of January. I mean, they could have done it for the new year, but I guess they wanted to wait another month. But here we go. ESPX went from 15.5 cents to a whopping 22.5 cents, which is just absolutely astonishing. Like, that's a massive increase. And then for ETSX, 16 cents to 18.8 cents. So not as big of an increase, but still very, very notable. So that's really great. Have that documented here, and then my thumbnails from now on will be using this graph that shows it in a large view like that now. So, and then I also took this from Passive, sort of the just inspired by Passive, total dividends. So you can see all the funds, the total dividends that I received from each of them. So I really like these two charts on the left. They're really good. So I like the change that I made. So, but as far as investing has gone for March, it was definitely quite tough. I only did $750 inside of my TFSA because I did go on a vacation in March, so I did spend a decent amount of money there. So expenses were pretty high for March. I didn't want to go into too much of a deficit for March. Wish the government would operate like this. You don't want to go into too big of a deficit, but here I am with my personal finance. Yeah, you don't want to go into too big a deficit, but so I just left it at that, because really I do have to do my RSP contribution very soon, and I'm currently in the process of doing my taxes in Wealthsimple, which has absolutely been a pain in the rear, to say the least, because every time I've gone to submit it, there's like some net file error code when I go to submit, because of my T3 data that I literally have from Wealthsimple, and I emailed Wealthsimple about it, and they just literally told me like, it's an error on the CRA side. Called the CRA, they told me it's not an error on their side. So I might have to end up printing it and sending it to mailing it to the CRA, which is the last thing I want to do in 2025 when we have all this technology and AI. Like, we have to freaking send our tax returns via mail and paper. Like, that's abysmal. Like, I can't believe that we have to do that, but I might have to, honestly, because it's I already had my Netfile account like locked, and I had to call CRA, get it unlocked. So yeah, taxes this year have been just an absolute freaking nightmare. Like, every year before, Wealthsimple tax has been like so easy for me. Every time it's been so easy, like amazing process. But this year it's just been absolutely terrible. So, but needless to say, with my tax return, I'm going to get about $5,300. And and then it said my RSP contribution room is going to be a whopping $11,000 for 2025, which is, is really great. But I'm going to have about half of that ready with the tax return, a little bit under half. And then I think I have a bit of extra, like my savings balance right now is like $1,500. And then I do have a decent amount of savings still, so I could probably just lump sum it all in April if I get my tax return. It might have to be May, honestly. Like, if it goes with paper, I might have like 4 to 6 weeks, they say, for processing paper tax returns. So that's absolutely brutal. Versus you can get it like the same week if you do it with Netfile. So might have to also look at another tax, another tax filing software. Wealthsimple might just be the cause of it. I might have to go with something like TurboTax or something. So I'll keep you updated on that. See what happens with that. But so pausing the TFSA contributions just for now. I figured, why contribute another $750? Like, my plan was to do $1,500 here, but I don't know, like adding another $750 when I've got to save up for this $11,000 that I got to submit. So I just thought, okay, just hold it off. Spent a lot with the a decent amount with the vacation anyways, so let's just hold off on that for now. So, but once I have that ready, that's going to go straight into VOO. So I mean, there's still some process with that. So I have to get $11,000 Canadian, deposit it into Questrade, convert it to US dollars using Norbert's Gambit, and then I have to deposit those US dollars into my Wealthsimple RSP USD account, and then I'm going to buy VOO. Because you want to avoid the withholding tax in your RSP, so definitely go with the US dollar fund. So I'm going to be buying VOO, so $11,000 worth of that. So that's going to be a massive increase to the VOO inside of my Wealthsimple portfolio. Continue to increase my United States exposure. So my United States exposure is 57.6%, which I think is pretty fine, actually. I think my Canada exposure is like too high, honestly, 30.13%. I'm actually fine if I start decreasing that. I think I've got to just increase international and decrease Canada, to be honest. The reason why I'm fine with decreasing Canada, there's actually a proposed change to the TFSA that may or may not come if the Conservatives win the federal election, but they want to add $5,000 of extra space to the TFSA, but it has to be invested in Canada. So for me, that'd be funds like ETSX and VDY, which I'm fine to do, actually. Like, that's great. Like, tax free, another $5,000, and you're helping support Canadian businesses with investment dollars. That's great. So honestly, I think I can decrease this because I'm pretty sure that that might come in. So we'll have to see, but I'm fine to hold off a bit on Canada investment for now, because if that comes into effect, I'll definitely be increasing my Canada investment. I don't want to be too much higher than 30, to be honest. Like, I think there's quite a bit of home bias already in my portfolio. So, we'll see about that. I think international, I definitely need to take a look at increasing that. I wish there were cover call funds for like solid cover call funds for international. I know Global X has a few ETFs, but the management fees are just so freaking high on those. It's insane. And honestly, ESPX and ETSX are really the only cover call funds I really I'm fine with because of their strategy as well as their fees, and I think they're just definitely solid funds. So I really like them, but I don't know about the international funds. I have seen Global X does have a couple. Maybe I could look at that eventually, but not in a rush to do that by any means. I'm pretty sure I would just increase VIU and VE for now. Another thing, VIU. This is another thing I want to take a look at. VIU versus VIDY. So VIDY. This has been bothering me. Like I need to honestly make a decision on this because VIU is the Vanguard FTSE developed all cap except North America, and then VIDY is picture like a VDY but for except North America, like developed countries. And so it's like, international high dividend pairs. And it's just been bothering me, like how much VIDY has been outperforming a VIU. So if I go into Koifin here, here's ESPX keeping in track with S&P 500 nicely. But here we go, VIDY, if I plot that versus VIU, like 76.42% for VIDY versus 53.28% for VIU. The only thing is the management MER is a little higher on VIDY. The trading volume is a little bit lower because it's a little less known. But this is some pretty crazy outperformance in my opinion. VIU was outperforming up until seems about the beginning of the 2022 crash. But even year to date, VIDY is just beating it by quite a bit. So it might be a replacement. The thing I hate about making decisions like this is if you let's say you make the switch and then actually VIU is actually quite undervalued and it's going to start beginning to kick up faster than VIDY. But I don't know. You can never time the market. I do think it's like if you have more concentration into better companies, it's almost like if you look at a VUS, which is like the total US stock market, versus the VFV, like a S&P, like S&P 500, which is less companies than the US, it seems to always seems like it's going to outperform. So it might be like something similar, to be honest. Like here we'll plot these two, like a similar situation, VFV versus VUS. So VUS is like your total US stock market versus VFV is your S&P 500. The S&P 500 is more concentrated, but has better companies in it. Has more of the better companies in it. Same thing with VIU and VIDY, I think. Like it's more concentrated, but has more of the better companies inside of it, like the top dividend pairs. So see, it might be a change that I might make. We'll see about that. So I think that's about it for this update, and I'll see you guys in the next one.